Hey, I am here today with Allie Mills from Windermere in Issaquah, and we're going to be talking about all things condo related, what to watch out for, some of the red flags if you're a buyer or a seller, and the things you need to know. So Allie, thank you for being with me today.
I am so excited to be here. So thank you for having me.
Absolutely.
We first met, a few months ago now, over a somewhat tricky condo transaction, and we learned a lot together.
We learned a lot, and it was a rarity. So this one in particular was a condo association within a condo association, and it was a little bit to untangle. Like I said, it's one of the rare things we have never seen before, but we figured it out, worked through it, and made it happen.
We made it happen.
Yeah.
And happy buyers,
and
happy
we closed
sellers.
on time.
We closed on time.
Yeah.
We're like swans, right? We're gliding calmly across the
Right.
surface, and then underneath it's a little crazy, but we got there.
Yeah.
So we're going to share what we learnt about that.
Yes.
And lots of other things and things to be aware of when you're buying and selling a condo. And we'll go a little bit into the new buyer broker compensation rules, because I'm sure there's lots of people that have questions about that. And of course, we're going to talk about rates.
Correct.
Be a bit remiss if we didn't do that.
So from your perspective, what are you seeing as challenges when buying or selling a townhome or condo?
Really, it's just you've got to know your stuff. You've got to do your due diligence. There's many advantages to buying a condo. There's a lot of people who shy away from them because they get scared by the monthly dues. But I think if you shift your mindset and see that it's just a different way of owning a home, then it has many advantages to many buyers. But you have to do your due diligence. Understand, and we'll go much deeper into this, what your dues are paying for, understand the health of the association.
So, in your opinion, who would the right kind of person be to buy a condo?
I think it's ages and stages of life, right, is how I kind of frame it. There's many advantages. They're great for first-time home buyers, those who are, just getting their toe into the water of home ownership, because let's face it, owning a home, and particularly if it's your first home, can be pretty scary. There's a lot of things to know and to figure out. So condos are very easy ownership because you only have to worry about your single unit, right? You've got the HOA and the management company who worry about the bigger building. So they're great for first-time homeowners. They're obviously more affordable as well, tend to be more affordable than single-family homes.
That is correct.
And they're also great for those who just don't want to do yard work. You don't want to look after a house. You don't want to spend your weekends and your free time doing stuff in a house. You want to be out there living your life and doing what brings you joy. And for those that travel as well, because they're really great to just lock up and go. You can leave them for, 2 weeks, 3 months, whatever it is. So as I said, it's ages and stages of life. So really good for, retirees, those who are traveling a lot. Perhaps they're, you've got the snowbirds who are here in Washington for the summer and down in Arizona for the winter. Because you can just lock and go and leave them and they'll be fine.
Okay. So you were saying, as far as paying HOA dues, what that goes towards, explain to our viewers a little bit more about what that is and how it's different and the same as owning a home and doing the upkeep and repairs out of your own pocket.
Yeah, so any condo is going to come with what we call your monthly HOA dues, so homeowner association dues, and they can vary depending on the building you're in and the community you're in. They could be a couple of $100 a month. They could be $1,000 a month, right? If you're looking at a high scale downtown Bellevue or downtown Seattle condo with, many amenities, you're going to be at the higher end. The thing to understand is what your dues are paying for, right? And typically, part of your dues is going to pay for the ongoing, regular, monthly maintenance of the community. So it could be landscaping, it could be paying your water, sewer, and gas. More often than that's paid by the association, or certainly water and sewer is.
That's
so some of your
included,
utilities, Your garbage, for example, is included. So part of your dues is going to that your monthly ongoing maintenance costs of your home that you'd be paying even if you were, living in a single family home.
And things like dryer vent cleaning is another big one.
Yeah, window cleaning,
window
regular
cleaning.
Roof cleaning, so regular maintenance. And then another portion of it goes into what is called the Capital Reserve Fund for the community. And that's essentially the pot of money that, everyone pays into, and the idea being that it grows and grows and grows, so that when you have those bigger ticket items that need to be done, for example, roof replacement, asphalt repair in a parking lot, carport repair, siding repair or replacement, then the idea being that there's money is taken from that capital reserve fund. And so homeowners therefore do not have to pay, hopefully, not too much for what's called a special assessment to cover those big ticket items. Does that make sense?
Makes total sense, yes. And something else I want to pull out too is that they have the reserves, and there's also a reserve study that's done every 3 years. That's required by law. One of the big things you want to look at when you're considering buying a condo or townhome is to look at the reserve study and see what the future spending is going to be for the next 5 years, so you know if there is
Absolutely.
any deferred maintenance that hasn't been taken care of, and if there could be a special assessment down the road if there hasn't been one already. So that will help you identify potential future red flags.
Yes, so, and that's really part of the due diligence that a buyer with their agent should be doing. So as a listing agent, one of the first things I do is order that resale certificate, which includes that reserve study, because if there's any problems with the HOA and the reserve fund, I want to know it about it up front, and we share that with potential buyers. Now, when I'm representing a buyer, we are taking a real deep dive into that reserve study and all the associated HOA documents. So I mentioned we order what's called a resale certificate, right? I want to give a little bit of explanation about that, because that is, in itself, it is a single certificate, and that's certainly one of the pieces of information that you look at. But it comes with, hundreds and hundreds of pages of other documents, meeting minutes, financial audits, financial statements, and this reserve study.
Governing documents as well.
Governing
that states
documents.
What you can and can't do within the association.
And CC&Rs and all that kind of stuff. But yes, your reserve study is probably one of the most important things, because that will tell you it basically puts a shelf life on all the items within a condo community. So everything from the roof to the siding to the mailboxes, literally everything. It's okay. So the expected life of the roof is 50 years. We've got 20 years remaining on it. And it puts budgets against those items of what it's potentially going to cost to replace those. And therefore you end up, at the end, with a percentage sum of how well funded is the homeowners association to handle all these things they're going to need doing over the next 30 years. Now, I will tell you, no association is ever 100% funded.
No.
It just doesn't happen. And it shouldn't be, right? Because the idea being that a lot of those items you're not paying for now, you're paying for in 20 years' time, and so you're building up the funds to pay for that. You really want to be looking at an association that ideally is somewhere between 20 to 30% funded. Then you're in, a pretty good spot. Less than that, then obviously the less funded they are, the higher that chance that you as a homeowner are going to be hit with what we call a special assessment, which is when they divvy up the cost and say, right, to replace the roofs is going to be X amount.
Depending on the size of your unit, if there are various sizes.
Yes,
in the complex.
and it's generally done by a percentage share of the whole property.
Yeah.
And it's, split between the owners, homeowners, and you pay up. And sometimes that's just a couple of $1,000s, right? Not a big deal. Sometimes it's tens of thousands of dollars. So something that you just have to be aware of. So it's not as I say, it's a different way of owning a home, right? If you buy a single family home and you own it for 5, 10, 15, 20 years, at some point you're going to have to put some money into the house. You're going to have to replace the roof. You're going to have to repaint it. You're going to have to replace the furnace. It's just a different way of covering those costs and eventualities.
Yeah, and most homeowners, when they buy a single family home, they're not typically setting money aside each month for future costs. And that's something to be considerate of too.
Yeah, very rarely. If you're going in and it's going to need a new roof in 2 years' time, then yes, homeowners are a little bit more aware about that. But yeah, and I include myself in that as a homeowner, we're not very good at sort of future forecasting and knowing that, yes, in 10 years' time, we've got to pay for a roof, and where's it going to come from?
Now, on the lending side of things, one of the great things at New American Funding is we have our own condo approval department. So you bring me a buyer, they found a condo they want to purchase. The condo is not Fannie Mae, Freddie Mac, or FHA approved, which would fall into the VA category as well. We're able to get all the documents. We We get a condo questionnaire from the management company.
Yep.
Collect everything, find out if it fits the boxes that are going to be required for any of those to get approved. They could do what's called a condo spot approval. Fannie and Freddie are very strict. One of the biggest things that we've ran into is the master policy deductible. So if you have a unit where the master policy that covers the entire project, but it's for the structure replacement. So condos are typically, the policy that you have as a homeowner is everything from the walls in, including your personal belongings. The master policy covers the actual structure. So if there was a total loss, they had to rebuild, it would be X amount of dollars to replace or to rebuild the structure. And then as the deductible goes, it could be anywhere between $10,000 to $50,000 or more. And if it exceeds 5% of the replacement cost, it's no longer eligible for Fannie Mae, Freddie Mac, and it's considered non-warrantable. However, it still could get approved for FHA because they don't have that 5% maximum deductible. So that is another option as well. And if there are issues that fall outside of that, such as non-completed repairs that exceed $10,000, it won't go FHA either. So if you have a roof replacement that needs to happen and you also exceed the maximum 5% for the master policy deductible, then we're looking at a private investor to get those done, and those are typically 20 to 25% down. So it
And a higher rate.
Higher rate.
Right?
So it totally changes the game at that point.
Yeah. So I think one of the most important things that as a listing agent we should be doing before we're even putting those condos on the market is getting hold of that resale certificate, which includes the master insurance policy, right? And sharing that with a lender. Because the last thing you want is to go under contract with a buyer and then find that we have some issues. And this was how we first met, right? Because we had a condo that I was listing. Thankfully, we knew about it in advance because I had ordered the resale certificate. But it wasn't going to qualify for any funding at that point. It wouldn't have qualified for any conventional loan. It had to be a non-warrantable or a QM loan.
I believe you told me at the 11th hour there was a change with Fannie Freddie guidelines to where they would allow it to go through if the buyer had additional loss assessment coverage. So on the master policy, sometimes there are limits as far as how much per dollar amount per loss that they would go up to. Some of them are unlimited. So I believe this one was a limited amount.
The guidelines changed fairly recently that Fannie Mae and Freddie Mac will allow buyers to buy an extra policy that will bridge that gap.
It's like gap insurance for your car, kind of. Yeah.
And in this case, it was relatively low cost. I would say relatively low cost, but I think it was about $1,000 per year. So it did at least enable the transaction to close and the buyer to purchase the property. But it's definitely something that needs to be factored in. I mean, condos are just more complex, right? From everything you review to the lending process, it's just a lot more complex than a single family home. And so just other things that we need to be aware of as professionals and how we guide our clients into buying or selling those homes.
And this all stems from, anybody you may have heard about this, the condo that collapsed down in Florida, and it was from years and years of excessive deferred maintenance to where there was visible damage in the pillars that supported the structure, and that's why it ended up collapsing. So ever since that happened, it was almost an overcorrection on the part of HUD, where they put very restrictive guidelines in place. And they're starting to see the impact of this in the condo market across the country, because not all condo markets are the same. The one in the Seattle market is different than somewhere in Tennessee or Maine or anywhere else.
Well, we have different issues affecting our buildings, right? Different weather.
Right.
Water,
a lot of water.
Yeah, a lot of water, a lot of wind. So yes, it's definitely more complex. But condos, I think, are a fantastic solution for many people. It really depends on, as I said, go back to the age and stage of your life where you're at. Don't be afraid of them. For some people, it is a harder pill to swallow because of the monthly dues. But if you sort of switch your mindset a little bit and just consider it as a different way of owning a home, there are just so many advantages to them.
That is very true.
Yeah. Should we talk a little bit about, because we've thrown out a lot of terminology that might be a little bit confusing,
Yes.
And we've got multiple different parties involved in a condo association, right? Because we have the HOA board and we have the management company. Do you want to talk a little bit about what roles they serve and how they differ?
Yeah, this is something that's never really covered. So the HOA board is a group of homeowners who volunteer their time to serve the community. So you've got your president, vice president, treasurer, secretary, and they're the ones, they have their monthly meetings or quarterly meetings, and then they also have the management company. The HOA management company, they're the ones who collect the dues and put them in the reserve account each month. They track all that. If there are, they do monthly violations as well. So if your trash cans are out for too long or they're on your front porch where they're not supposed to be, they do things like that. But they're also there in an advisory capacity to advise the board on steps to take if the board's not sure what to do, how to do things. If they need vendor help, they will reach out and get bids from vendors for certain projects as well. But HOA management companies are there strictly as an advisory capacity. Some of them have an after-hours service as well. So if something happens, an emergency after hours, you can contact them and they can get a vendor out there. If it's a roof leak or a broken window or something like that, they help in that respect. But all decisions financially are made by the board.
By the board.
And then they're carried out with the permission and direction of the board. That's when the management company disperses funds for certain things.
Yeah. So in my experience, one of the things that I would say homeowners in general, and single family homes can have homeowners associations, right? It's not just condos. But I would say my advice to anyone buying into a condo is be involved in the board, right? Don't necessarily know all of these positions, treasurer, vice president, etc. It's a volunteer position. Not everybody wants to take that on, but at least have some kind of involvement. Go to the monthly meetings, go to the quarterly meetings, and so you understand why the board is making the decisions they're making. And have a vote, right? Homeowners have a vote. You have to vote on an annual budget. You have to vote if there's a special assessment that needs to be charged for homeowners to cover certain repairs. So be involved and
ask questions.
Ask questions, absolutely, because we like to think that everybody is, and it is a very selfless task. I have served on an HOA management company myself. I will say an HOA board. It is a very, I say selfless, but people do it for nothing. They're doing it out of the kindness of their heart. So, and they're trying to make sure that they are doing the best for everybody. And generally speaking, if everybody's happy, then they're doing something wrong, right? Because tough decisions need to be made, right? Money has got to be spent. Otherwise, you end up in a situation where the deferred maintenance is so bad that the building is just, deteriorating rapidly. So get involved, understand why they're making decisions, and sometimes question them. Do they have ulterior motives, right?
And all management companies have those documents, the budgets, the meeting minutes, the declarations. All those things are typically online in a portal that, as a homeowner, you would have access to. Understanding the budget is another big piece of it too. Knowing where the money is going, knowing what's coming up, those expenditures. Yeah,
understanding the budget, and I would say for future homeowners looking, considering a purchase and in a transaction, go through the meeting minutes, because the reserve study tells you one thing, the budget might tell you another thing, right? But they're all things that have been decided. The meeting minutes tells you what's coming down the pipeline and hasn't yet been decided. So it's there that you might realize that actually they are already having conversations about the roof needing to be replaced in 2 years' time. So that's really important.
And those meeting minutes are one of the things our condo department reviews as well, because that, like you said, is an indicator. If there could be a special assessment, there could be discussions they're having about, we need to have this done. It's going to be this much cost. We only have this much in reserves. We're going to have to do a special assessment.
And past issues as well, right? It can tell you that there was the roof was leaking in building H, are you buying a property in building H? And if you're reading those, then there's certain things that you then just need to go a little bit deeper and ask a lot more questions.
And always get a home inspection.
Always get a home inspection.
Even on new construction, get an inspection done.
And always on a condo. I mean, I've heard it. A lot of people say doing a home inspection on a condo is kind of what's the point, because generally it's only going to be what we call paint to paint, so it's the interior of the unit. Which, yes, you're not going to learn anything significant about the roof or the siding from that paint-to-paint inspection, but you're going to learn an awful lot about the unit that you're considering buying. And some of it's just helpful to know. Where is your water shut off? What's your electrical panel? What does that look like? How does some of the systems function in the home? But it's also going to give you some telltale signs of, well, has there been, signs of a previous leak from a unit above, or have you leaked into a unit below? It can be very telling, and for the sake of a few $100, get a home inspection.
And they can also tell you if your furnace is going to be in a position to where you need to have it replaced. And sometimes they'll even put the furnace in the attic.
Yes.
I've seen that. And
yes.
That's a problem.
A lot of times. In townhomes, yes. It's a lot of
townhomes,
times it can be in the attic. And it's not unusual. In single family homes, you can also find furnaces in attics. But certainly if you're buying a townhome, then also have, even if you are, the owner is not responsible for the roofs and the attics, have your inspector poke his head up there. He can tell a lot about it.
And they do more than a head and shoulders inspection. They actually get up there, poke around, look at
Yeah.
things, see if there's any signs of rot or water
intrusion,
anything.
Rodents.
Yeah. Rodents. That's
we
another
got
big
a lot
one.
of birds and we got a lot of rats in this part of the
Yes.
world.
Yes.
So again, nothing that is scary and not fixable, but you want to know it's there.
Yeah.
So that you are informed and can make decisions. And sellers should know it's there as well.
Absolutely.
So if you're a seller, then my advice is always do a pre-inspection before you go on the market.
That way you can address it and then not have to take a hit on the purchase
Yeah,
price.
it's all about maintaining control, right? And you're not
Right.
renegotiating after you've already gone under contract. Yeah.
It's good advice.
If you don't, if you don't do a pre-inspection, then are you prepared to renegotiate your price all over again with a buyer? Because that's ultimately what you're going to be doing.
Absolutely.
So
you wanted to shift gears into the NAR settlement?
well, I think we should. I think, it's a big topic out there. The media's made a lot of noise about it.
A little confusing
It's
sometimes.
Yes, it's a little confusing if you don't unpack it. And God bless the media for giving us scary headlines, right? So to give a little bit of a backstory, this all started from a class action lawsuit that was filed back in 2019. So it was a bunch of sellers who sued NAR, National Association of Realtors, saying that they were basically price fixing listing fees, and sellers didn't have, or listing and buyer broker fees, and sellers didn't have any power to negotiate, and there was lack of transparency over who was paying who, how buyer brokers got paid. So yes, this lawsuit got filed, and fast forward 5 years later, then it was settled, and then our National Association of Realtors reached a settlement with them, and it has led to a number of changes. Now, I will also say we in our part of the world, so we're in Seattle and Washington, we use what's called the Northwest MLS. Our MLS is not owned by NAR. And that is quite significant because our MLS, thankfully, they saw the writing on the wall back in 2019.
And they were proactive about it.
Proactively started to make changes to both our policies and our paperwork. And so really what the NAR settlement mandated was that there needed to be decoupling between what the listing broker gets paid and what the broker representing the buyer gets paid, and it's full transparency over who pays that and how much. And generally speaking, it is the seller that pays both, but it was all in some parts of the world lumped together, and it's 6% and take it or leave it. There was no ability to negotiate. Now, I've been in this business for 10 years, and I can tell you for that long, I've always been negotiating both the listing fee and making recommendations of what we pay the buyer broker as well. So our Northwest MLS was ahead of the game. We've already decoupled that. Our paperwork makes it very clear what the seller is paying and also what they are paying for a buyer's broker compensation as well. We also made that information publicly available. Again, since 2019, that has been available on the likes of Redfin, the likes of Zillow. So that information is ported over from our Northwest MLS into the Zillow and the Redfin listings. So buyers have been able to see, my broker is going to get paid 3%, 2.5%, whatever it is. The big change now that came out of NAR is that it stated that sellers don't have to pay buyer broker compensation. Well, again, since 2019 over here, a seller has not had to pay buyer broker compensation. Most do because, unsurprisingly, if you don't, then there's, it's going to be harder to sell your property. But the NAR settlement also mandated that buyer broker compensation cannot be published on the MLS anywhere. That's where our Northwest MLS pushed back, because the whole point of this settlement is to increase transparency, right? And make it clear who's getting paid, how much, and who's paying it. So by removing that information from the MLS, it's removing, buyers have then no idea how their buyer broker is getting paid. So our Northwest MLS has said, no, we're going to keep that field there. But sellers, the paperwork has changed. So sellers now have essentially one of three options when it comes to deciding how much and how they're going to pay a buyer broker. The first is that they agree a fixed fee, and it could be a percentage, it could be a flat fee, depending on the sales price. And if they agree that amount is entered into the MLS, and again, very publicly available on the likes of Redfin, etc. They then have the second option to kind of say, okay, well, yeah, I'm happy to pay reasonable and fair buyer broker compensation, but I want buyers to request it. So again, as a result of the NAR settlement agreement, buyers and brokers now have to enter into a buyer's agreement prior to a broker doing any work for them, i.e. showing a property, writing an offer, or as soon as reasonably possible. So, which I think is amazing, right? Because buyers weren't treated like sellers. You don't even go to your doctor or do anything without signing an agreement. So why should you be signing up to work with a buyer broker without signing a piece of paper and having a contract in place and understanding what they're going to do for you, right? And what they expect to be paid as a result of those services. So I think it's an amazing thing that we now have to have these buyer broker agreements in place. But that clearly specifies, me as your buyer broker, I expect to be paid this. And if the seller is offering less than that, then you're going to make up the difference, right? Does this all make sense? Or
Yes, it does. No.
Because it's a lot. It's
Absolutely.
a lot to unpack.
Or if the seller doesn't want to pay buyer's agency commission at all, it's up to the buyer.
Then it's up to the buyer, right? So if there's either a difference or nothing at all, then yes, it's up to the buyer to pay it. So the seller can now say, well, look, I'm happy to pay it, but I want the buyer broker to request it in their offer. So at which point, what you as consumers will see, or as buyers will see on the likes of Redfin, is it will say request an offer. The third option a seller has is like, no, I'm not going to pay any buyer broker compensation, and at which point it will either show up as zero or that field will be blank. My advice to sellers that I'm having and the conversation that I'm sharing with them is our job as listing agents is to sell the house for the highest amount of money possible and to net you the highest amount of net proceeds, right? When you real boil down to brass tacks, that's what you're hiring us to do. And I think in order to do that, we need to lower that cost of acquisition for buyers, because buyers don't suddenly have a ton more money in their pocket as a result of NAR settling
Most
this,
of them
right?
don't, no.
They really don't. So if they then have to now find the funds to pay their broker, then where's that coming from? It's coming from their down payment. It's coming from the price that they're then going to be willing to offer on a property, right? They don't have a separate pot of money. It's like, okay, yeah, sure, we'll just pull from this pot. That's not the reality. So by offering fair buyer broker compensation, you're actually making it possible for more buyers to potentially write on your property. And there are buyers who will walk away from properties. It's like, no, I'm not going to write an offer on that one because I don't want to be paying my broker the additional amount that over and above what the seller's not willing to pay.
Means to do that.
Or I have no means to do that. I mean, yes, back in the day, buyers assumed that they had to have 20% down payment, right? That's no longer the case. We can get buyers in a home with as little, in some cases, in zero down payment, but certainly with 3 or 5%. They often do not have the funds to do that. So by offering fair buyer broker compensation, I think a seller has a far greater chance of attracting better buyers and, dare I say it, attracting better brokers. And it takes experts to keep transactions together. So you really are better off by having a good qualified buyer on either end, a good qualified broker on either end of that transaction.
Correct. And another challenge too is, say the seller does not want to pay the buyer's agency commission. So they say, well, we can increase the sales price, look at doing that. if you've got someone who's coming in with 3% or 3.5% down, first time home buyer, they don't have the extra cash to pay the agents. They can increase the sales price to compensate to build it in that way. But if it doesn't appraise, you're back in the same position.
You're back in the same problem. Yeah. So it's definitely, I say that, everything has changed and yet nothing has changed, because as far as, when you look at it on sort of the facts and certainly what the media is saying, it sounds as if, sellers are going to save thousands of dollars. Buyers can now go unrepresented and not pay buyer broker fees. And that's really not the case. As I said, a lot of our processes and paperwork has already changed to account for all of these changes that are in place, all these mandates that have come into place. So, kind of really not much has changed. But we're only, we're 6 weeks into when this all came public.
And it's still, the dust is still settling.
The dust is still settling. Those sellers that are on the market now or just listing probably recruited their agent months ago, and so they'd already perhaps had different conversations. It'll be interesting to see potentially what might happen. Do I think we're going to see a sudden change in sellers either refusing to pay buyer broker compensation or paying significantly less? I think the majority understand that it's in their best interest to pay that. There's always going to be some people, both buyers and sellers, who want to, they see the opportunity to, in their eyes, save some money and go down the discount route, right? Yep. And that's okay. That's why we have Walmarts and we have Nordstroms, right? There's always going to be those two potential markets out there.
And just be aware of, you kind of get what you pay for.
You get what you pay for, and I think it's a really good thing for buyers and buyer brokers, right? Because now, it was very easy for a buyer to just, meet a nice agent in an open house and start working with them. That's great. But you don't work with an agent because they're nice, right? You work with your buyer broker because they're good at what they do.
They're effective.
They're effective, and they're going to save you money, and they're going to save you from a lot of pain and heartache and making wrong decisions. So buyers really should now be interviewing multiple brokers before they commit to anybody, fully understanding what their compensation expectations are, but also fully understanding what they're going to do for you, and how they're going to represent you, and potentially get you out of some pretty expensive pickles.
Yeah. I recently spoke with a buyer who's also a seller, and I had the conversation with them. Since this ruling went into effect, I'm having this conversation with all my buyers, asking them, okay, if the sellers are not willing to pay your agent's commission, are you in a position to do it? Yes or no? We find out if they are, if they aren't, what the options are, and we build a strategy around that. And I was asking them that, and they said, well, just so you know, on our listing, we're not going to pay a buyer's agent's commission. And I asked them why. Well, we don't think that we should, now that we don't have to. Okay, and I asked them if the home they were selling was the first home they ever owned. Yes, it was. Okay, so when you bought the home, did those sellers pay your agent's commission? Yes. Had they not paid that, would that have prevented you from buying the home? Or did you have the extra cash to do that? They're like, oh, we wouldn't have been able to do it. And I just let them think about it, and they're like, okay, I get it now. And then now they're offering, because they understand that could bar someone entry to homeownership.
Absolutely, and particularly, we're in a market right now where we're still in a strong seller's market, and we've still got a large portion of homes receiving multiple offers. And sellers aren't going to get those multiple offers if they are not paying fair compensation, because there will be buyers who will choose not to write. I mean, I'm having conversation with my buyers, and they're saying, okay, yeah, we understand it, and we're very happy, with what you expect to be paid, and yes, we'll make up the difference. But we also want you to tell us when we're looking at a house and very interested in a property that is not offering what we've agreed that you're going to get paid, because that's going to factor into our decisions. And sure enough, if that difference is, 0.5%, it's an easier pill to swallow. If it's 2%, 2.5%, then buyers, I think, will start to self-select a little bit. And it's like, no, I'm not going to go after that property. I'd rather go after this property.
And that's the problem, too. Yeah, you're not going to have as many eyes on your listing.
You're not going to have as many eyes on your listing. And yeah, I mean, in theory, yes, it all gets published in the same way, it all gets promoted on the MLS the same way. We as brokers can't filter by how much compensation is being offered, so we can't eliminate what our our buyers see or our clients see. But I think there will be a little bit of self-selection. I also think that potentially we could see a rise or an increase in buyers trying to do it themselves. And that worries me a little bit. And a little sort of fact that's unknown, it was only actually as recently as the 90s that buyer brokers got paid over in Washington. Until then, buyer broker compensation didn't exist. Buyer brokers really didn't exist. And it was the listing agents that would also write the contract. Buyers thought they had representation, but actually they didn't, because the listing broker represents the seller. If you do represent both, then I personally don't do what's called dual agent. I believe if someone's representing a seller, my goal is to sell the house for the highest amount possible. If I'm representing a buyer, my job is to buy it for the least amount possible, and it's a huge conflict of interest. So I think we might see this situation, and we've got brokers potentially representing both parties, and I caution everyone to understand the implications of that, because they're significant.
And I think we've both heard stories too, where even though an agent is acting in all fairness across the board, it can be perceived by either party as a conflict of interest, or they did something wrong, and then they end up with a lawsuit.
It's a huge conflict of interest, and it's a very fine line to try and navigate, because as your agents, everything is shared with us, is confidential. We have a fiduciary responsibility to do what's in your best interest. You can't do that for both parties, in my opinion. But it is legal, so it will happen. I think we might see a slight increase in it. But I also think, as I'm kind of giving my sellers a heads up that, there's potential that we're going to get an offer from a buyer who is not represented by a buyer broker. And there's conversations we have about that as well. So, I hope we're not going into the Wild West. I don't think we are. But there is always going to be some people who will try and do the DIY model. There always are, right? In any industry, in any sector, in any part of life, there's always people that think they can do it themselves.
So make sure you're protected. Whether
Yes.
you're buying or selling, just make sure that you're looking out for yourself. If you need representation, get representation.
Yeah. Should we talk about rates?
Rates have been crazy. So the funny thing about the Fed announcement was that they had announced about a month ago that they were going to be doing a rate cut. So rates had started to come down even before the Fed rate cut, because the markets work in a different way. So it's indirect. So the Fed rate cut is indirectly affecting mortgage rates. The direct impact works on credit cards, auto loans, and home equity lines of credit. So ours is already built in. Ours is already baked in to the where the rates are. We're seeing rates anywhere between 6.25% to 6.5% right now is where we are currently.
Okay.
And this is October 1st.
Yeah.
So a lot of turmoil in the economy right now, and the dust is still settling from the Fed's comments. And when the Fed does not say what traders and investors want to hear,
They panic.
Almost like a teenager on prom night.
Yep. That's a good.
So they're very temperamental, very emotional, and we're going to see some turmoil for probably another week before things start to settle down.
Yeah. And where do you think we might be? Well, actually, first of all, I think, yes, the rates are kind of hovering around about 6.25%, but I think we're seeing some first-time buyers, depending on, and obviously your rate is dependent on many factors.
Correct.
Going under contract for under 6%.
Correct.
Yeah, which is, feels pretty good compared to where we were in the spring at 7.15, somewhere around that.
And even despite, rates being higher than we were used to 3 years ago, rates are still really good.
They're still really good, historically speaking. Yes.
And there's a lot of opportunity out there. So if you're in a position to buy now, even though the payment may be higher than what you're wanting to pay, getting in, capitalizing on the equity gain, and refinancing later is the way to go, because you can refinance later, but you can't rebuy your home.
Can't rebuy your house, yeah.
Yeah.
Marry the house, date the rate.
Yeah, as much as people are tired of hearing that.
I know, but what's going to happen when these rates continue to come down, right? And I think they will, right? It's expected that the Fed's going to make another cut before the end of the year.
We're probably going to see two more cuts by the end of the year. Could end up being another 0.5% to 0.75% cut. And it all, when they announce that that's going to happen, like I said, the mortgage rates will typically come down before the Feds meet.
Yeah. So we're going to see those rates come down, which means we're going to see prices go up, right? Because
More demand.
More demand, more buyers. I heard a statistic from NAR that for every percentage point reduction in rates, there's about 3 to 4 million new buyers that can then come into the market. So obviously you've then got a lot more new buyers coming in and getting ready and able to buy a house. But I think a stat that I prefer is that for every 1% change in rate, it's a 10% change in buying power, right? So
Correct.
if you see those rates come down by 1%, then buyers can afford 10% more house. And buyers buy on monthly payment, right? They don't buy on the price of the house, they buy on monthly payment.
Yeah.
If we see those rates consistently come down, then we're going to see those prices consistently go up.
And there's always the talk about having the strategy. We can look at the option of having a seller paid permanent buy down, a temporary buy down, things like that, or even if the buyer has enough aside from the down payment to do a permanent buy down as well. If it's something they want to do, just to keep the initial monthly payment as low as possible.
Yeah.
If it's right at that breaking point for them.
And that's where you do a lot of financial modeling to help them understand, is it actually worth doing that, knowing that you might be able to refinance in 12, 24 months.
Based on what their goals and
rate.
needs and their budget are, I can build a strategy around that, showing them what the options are. And when they find a home they love, how the negotiations go with the seller will ultimately depend on which of those strategies
where they
we
land.
use. Yeah.
So from what I'm hearing, it seems to be a current theme in our conversations today is work with an expert.
Work with an expert, always have a good strategy.
Yeah.
Yeah.
And be prepared to be flexible, right? Because it can change.
It can, quickly.
Yeah, very
As we
quickly
know.
in this business.
Yeah.
All right. Anything else you think we need to cover, or?
I don't think so. Anything else you want to cover?
I think we've got it all. Just do your due diligence and make sure you're working with good people. And because
Yes.
it takes a village to buy or sell a house. It's not any single person. It takes a village.
Absolutely. Well, thank you for being here. I appreciate it. And we will talk to everyone soon.
All right. Thank you for having me.
Thank you.